All right. Hello, everybody. Welcome back to another market close. We're done for the week, Friday, June 14th, 3:46 p.m. We're officially done. We got basically 15 minutes left to the entire week on the broader markets. It's been a fun week. It's been a good week, and markets have done well this week. Right now, markets have been pretty choppy today. I mean, if you look at the S&P, Tesla was down. We'll talk about Tesla. S&P's flat. Look at that. Down 0.07% on the day, 542. Had a dip to like 539 in the pre-markets. Got back to 542. I think this week topped out at 544. It's been a relatively simple day for the markets. Nothing that crazy. Snowflake's up. CRM is up. Nvidia is up. Nvidia hit 133 at one point. Nvidia 131 right now. Robin took a little bit of a nosedive today, down 3%. And the reason for that is because of Bitcoin. Bitcoin right here, 65,000. We have not seen Bitcoin at 65,000, I believe, since April. I mean, let me... Sorry about that. Let me see on the chart itself. Yeah, we got 61,000. Oh, wow. We got to 61,000 back May 14th. Holy crap. How did I miss that? I did not notice we were at that level. Wow. Okay, so in May, we got to 60,000. That was recovering from April. April, it took a little bit of a hit. And yeah, now back to 65,000. So it's been about 3 weeks since we got to these levels, but we're back. And that sucks. Shout out to Farzad. Farzad here being in the chat. We'll talk more about Tesla. There was this video I posted on Twitter, if you guys saw a couple of hours ago, of someone who called Tesla the next Enron. So I thought that'll be really interesting to look at. But the point is, today's been a relatively flat day in the markets. Some stocks are up, some stocks are down. One stock that is down a little bit more than some other companies is SoFi. Unfortunately, SoFi has just not been able to have a decent day. Anthony Noto did buy some shares. SoFi right now down 5%. Noto did buy $200,000 worth of shares at around 648. So I think it's like 38,000 shares, which is nice. It's just the Qataris sold, 20 million. So doesn't really put a dent in what's going on, but it's nice to see Noto's buying. At the end of the day, if you live by that Peter Lynch quote, which is something like insiders sell for a lot of reasons, but they buy for one reason. Well, I mean, he's buying because he thinks it's cheap, and either Noto's wrong or he's right, and it actually is cheap. So we will see what ends up happening from there. We got Josh, who bought 2,000 at 650 today. Yeah, I think a bunch of people bought the dip on SoFi today. A lot of retail bought the dip. The question is, will institutions buy this dip, and what's it going to take to get SoFi to get to the next level? I do think when rates get cut, liquidity will be injected into the markets, and SoFi's probably going to be back at $7.50 or $8, especially if they have good earnings. But right now, it's really tough when one of your top 4 shareholders ended up selling. Now, one of the only green names today, outside of things like Adobe and Shopify that have had great days, Shopify up 5%, Adobe up 15% on earnings, is Palantir. I don't really know why Palantir is up today, 1.33%. I think the broader SaaS ecosystem is recovering a little bit with Adobe earnings, and maybe that's what's helping Palantir. But 23.58 on the day, can't complain, up 1.33%. SMCI down 3% after being up 9% a couple days ago. So good day for Palantir and a rather flat day for the rest of the market. Okay, let's look at this Tesla video that came out on Yahoo Finance. I don't even know who this guy is, but he caught my attention. So let's listen to what he has to say. He thinks Tesla's the next Enron. I think it's always interesting to get a bear's perspective. It's not Gordon Johnson. It looks like he woke up on the wrong side of bed, given Elon said, 30 trillion yesterday. Let's hear his perspective and see if there's any merit to what he has to say.
Yeah, thanks for having me. Well, in my view, Tesla is the biggest stock market bubble in world history. And we have just seen the start of it. You see that, the models are aged. And valuation is absolutely insane. Earnings are falling off a cliff. I would say they're falling 50% this year. Right, I have like 140 earnings for this year. I think consensus is 265. It was like 5 at the beginning of the year. So if you think of it, $1.50, how do you value that? I think given that there is no growth here, 10 times earnings is very generous. So my price target is $15. Having said that, I think this, in the end, is going to be a donut.
Dude, when he said that, when he was like, well, it's 15, but it's actually 0, I started dying. I think he's definitely trying to get headlines. I mean, look, we're talking about him, right? I've never heard of this guy before. But I mean, you just can't be serious.
Because once it gets into those levels, there's so much going on here in terms of class action lawsuits, boards, which is paying itself enormous money, Elon, which is paying itself enormous money. So I think this is hugely dangerous, and in the end, it's going to prove to be the next Enron.
Lots of questions. I guess first, just starting off with some of the concerns that you listed. Those concerns have certainly not caught up to the stock price. And even taking a look at the reaction that we saw from some of Musk's comments last night, there initially was some excitement surrounding the growth, at least that he sees for Tesla over the next several years. I guess my first question to you is, what's going to change the perception here or the minds of investors? Because up until this point, we haven't seen some of those concerns that you've laid out reflected really at all in the stock price.
I would say yes and no. Let's not forget that the stock is down 60% from all-time high at the same time as the market has gone up 22%.
This argument right here, real quick, I really don't like this argument when people say Tesla's down 60% from all-time highs. It's not Tesla's fault that in 2021, we had the greatest bubble since 2000. And Tesla went up to 415 or whatever. Like, that's not Tesla's fault. So, I think it's really hard when investors blame, oh, well, the stock's down. It's like, well, dude, it shouldn't have never been at this level. If you bought the top, sorry, it is what it is. But you can't blame Tesla for investors pumping the stock that high, because it's not really their fault. It was just the nature of market dynamics.
25% in the meantime. So, but it's step by step. Where what will need to happen here is, of course, that the retail crowd needs to give up, because that is what's holding up this stock. Valuation makes absolutely no sense. Trades on.
Do you think the retail trader, though, will give up on this? And I think that's so interesting, especially surrounding Tesla and that excitement and exactly what that group of investors has been able to do around the broader story here for Tesla.
But everyone runs for the hills when it goes down. So the stock needs to go down. Once it goes down, it's going to go down more. And I think what drives it down is earnings. And I think we are very, very close to the turning point, because so far it's been a slippery slope. They've sold cars poorly, therefore they lowered the price, therefore earnings went down, and it's circulated. Now they are very, very close to ways end here. This quarter, they are really introduced almost 0% interest rates on the cars. When Q2 results come, if you think Q1 had terrible deliveries, but actually not that bad earnings. In Q2, they have done everything to get cars out of the door, and it's gone relatively well. So deliveries are not going to be great, but they're going to be okay. But earnings, 25th of July, are going to be absolutely terrible.
Now, look, earnings might not be the best, but earnings were already bad in Q1. Elon sold a dream around FSD, and investors bought the stock. Remember, when he says, well, if it goes down, it's going to keep going down, we already had that when it went to 138. Like, we went through that moment. The idea that replicates itself again, I just feel like that's unlikely for that to happen all the way again off another earnings after investors decided to buy, particularly retail investors. His argument is retail investors will give up on the stock. Retail investors are the reason Elon just got paid. They're not giving up on the stock. They're not. Retail investors have been sitting on dead money for 3 years for Tesla if they bought at some elevated levels. I don't think they're giving up on the stock. The Elon brand is too strong, especially given the stuff he said yesterday about Optimus and FSD potentially making the company worth $30 trillion. So even if earnings suck and deliveries suck, which they did lower interest rates, so I don't think it'll suck that bad. If he continues to sell the narrative around FSD, and retail investors already bought the stock in the last quarter because of that narrative's not going away. And if that narrative's not going away, then I think if you need a new narrative to get retail to sell the stock, and I don't think there is a new narrative. I think the same narrative is going to exist. On top of that, rates are coming down. And if rates are coming down, well, then that's going to be bullish for Tesla just from an algorithmic perspective in terms of how markets trade certain stocks that are rate sensitive. I think it's going to be tough to imagine rates coming down as bearish for Tesla. So it's going to be interesting to see how things play out. We will have Steve join us in about 20 minutes, guys. He's going to share some thoughts on Tesla. He did buy more Tesla today, and some thoughts on Apple. I want to talk after the bell in 4 minutes about two things. Number one, I want to talk about Apple. and a little bit about market cap and valuation. Number 2, there's a really good clip from one of the Morgan Stanley strategists that I thought was some really decent analysis about the risk reward in investing currently in this market. What does it mean to invest in this market and how you need to kind of psychologically rationalize it? I thought it was some really good stuff. So I want to take a look at that. Now, money market funds, if any of you guys missed the update yesterday, money markets did increase by 28.02 billion to 6.12 trillion. So money markets the highest they've ever been. I think basically since inception. I mean, I think we got to like 6.11 trillion a couple weeks ago. So it is an all-time high. If that continues to increase and the market continues to pump, as soon as rates get cut, that money is going to have to leave the money market funds. At least you would imagine some of it leaves. And if some of it leaves, that could create more liquidity coming into the broader markets. We did see yesterday that $90 billion have entered into the stock market last month into ETFs. 60 billion of that went to equities, 30 billion into fixed income. So markets have seen an injection of capital in the month of May. Now, Tesla right here, 178 down 2.4%, hasn't really pumped off the shareholder meeting. I think everyone knew that, like every single meeting, every single Cybertruck event, all that stuff, it falls. The stock happens to fall after those events. So really not a surprise, but it was nice seeing it get to that 190 level when Elon did get the compensation package. People decided to take some profits. MicroStrategy's up 14.93, just a little bit. Snowflake 127. If you missed the TJ option segment on the market open today, and you're interested in the plays we made, we bought 300 shares of Nvidia. We sold 3 covered calls at a 140 strike for July 12th. And then we sold 7 cash secured puts for a 125 strike for also July 12th. So our adjusted cost basis on Nvidia, given the premiums that we picked up this morning, is about 121. And we also sold, I forgot how many contracts on Snowflake, but I think like 10 puts on Snowflake at 120. And so those were the moves we made today. We picked up a decent amount of premium on Snowflake and Nvidia as well. GameStop. So GameStop's going to have their shareholder meeting tomorrow. Market close in 2 minutes. Not tomorrow, on tomorrow, Saturday. What is your plan for the weekend, by the way, guys? What are you guys doing over the weekend? This is the first weekend in like 3 weeks where I'm just at home. I'm not doing anything. I'm not traveling to AIPCon or nothing. I'm staying out. By the way, I put out that AIPCon video. So if you haven't watched it, make sure to check it out. I did a good 20-minute recap of what I took away from AIPCon. So that is uploaded. GameStop right here, 1%. Monday is going to be their shareholder meeting. And I'm definitely interested to see what the hell they have to say, because Warren Katie now owns 9 million shares, no more call options. He's the 4th largest holder. And I think the story is just getting started for GameStop. His average is 23, so he's up about 25% of the shares, $50 million. I think he's holding till this sucker goes to like 100 or 150. And what gets it to 150? I have no clue. But is there a chance it gets there? I think Warren Kitty feels like there might be a chance. S&P, look at that. We got about 44 seconds till the market closes. S&P is going green. Look at that. S&P is going green on a Friday. You cannot stop this market, dude. People want exposure. Nvidia going green into the bell as well, 131.94. Just incredible. Look at that green candle. Wow. It's not a huge green candle. We're up 0.04%. But the fact that people are coming in and they want the market, they want equities. Just incredible. Just incredible to see this happening. Every week you think, well, it's time for it to fall off, time for, things to get rough. People want exposure. People really do want exposure, and the market's not giving them a reason, either from an earnings perspective or from an inflation perspective, to not want exposure. All right, June 14th, got a bunch of stuff to talk about. Thank you, everybody, for being here. Happy Friday. The stock market for this week is now closed. All right, markets closed. Let's take a look at some of the stuff that went down on the day. Tesla down 2.4%. SoFi got hit, down 5%. We'll ask Steve about SoFi and what he thinks about the Qataris selling. GameStop down 1.37% of the day. Snapchat down 0.3 or 0.13%. Snowflake up 1%. Shopify, great day on Shopify, $67, up 4.5%. Palantir as well, good day, up 1.38%. Broadcom, just the gift that keeps on giving. This thing is up 3.34% today. It was up 15% yesterday, so basically a 20% week for Broadcom, which is not easy, dude. This company is worth $804 billion. Like, it's a multi-$100 billion market cap. To move it 20% is just incredible. Again, investors thinking, well, if they miss the Nvidia run, maybe they can get into Broadcom and get a run from that. And Broadcom's guidance doesn't give you any reason to be afraid of what they're going to continue to do in the future. JP Morgan up 0.07% of the day. Baba's down 3%. I didn't see that. Oh, Biden is at the G7 thing today. With all the big presidents across the world, the Indian president, Italian president, all that stuff. So that is happening across the world right now. The only reason I thought of that is because I saw Baba down, and I don't think China attends the G7. I don't think China or Russia enter into those meetings. So yeah, Alibaba's down a little bit today. Dell down about 0.07%. Hims, I didn't look at this today. This is down 2.6%. Airbnb down 0.09%. Spotify up 2%. Meet Kevin did sell his Biddy, even though this went up today, 1.83%, which is a short Bitcoin fund. Uber's down today. KKR is down today. GoDaddy, which beat Palantir to be in the S&P 500. Is that up or down? GoDaddy is down today a little bit, down 0.48%. And S&P ends green. 542.72. Okay, let's listen to this Morgan Stanley person right here that I told you guys was really good. Sherry Paul, I thought she had an incredible take on what's happening with the market. So let's listen to what she has to say, and then we'll keep going from there. She believes the market will broaden, but the way she kind of frames how it will happen, I thought was interesting.
Stanley's Private Wealth Managing Director, Sherry Paul, says the market can go higher and joins us here at Post 9. Welcome, Sherry. Good to have you. Did anything change for you this week, given all the inflation reports and the Fed?
Not much. You know, when I was here in January, I've sort of talked about how I thought things were going to turn out better than people had thought. And there were two important things that investors should pay attention to, and that is to be directionally correct, not perfect. So the direction of inflation, down. The direction for rates, down. The timing when the data will always confirm that is to be seen. But the time for portfolio adjustments was in January, and now there's another pivot coming.
Another pivot coming when?
Well, another pivot.
What kind of pivot?
Pivot for rebalancing right now for people who really enjoyed and appreciated some of the sector-based investments that we've been recommending to clients. Then now would be a time to sort of take a little bit of gain and redistribute it into other value plays. But we're still staying tight here in the U.S. and the mega caps, big caps, centered on innovation and good growth rates. But the pivot here is to rebalance the portfolio, not to get too greedy.
I've been trying to give MS some props, especially Ellen Zentner and the econ desk, for saying in May that weaker prints are coming, and they certainly did, and you're still looking for 3 cuts this year. Can the market work with that and avoid growth concerns, growth scares?
Yeah, we think so, and I, as a portfolio manager, think so for sure. So what's great about the Morgan's call on rate cuts is we've stuck to our rate cuts. It's just the timing has shifted a little bit, but again, we're in the right direction where we know rates are going lower.
And again, that's a big point. The CPI and PPI data we got this week, if you missed it, it was good. CPI 3.2, PPI 2.2% year over year, negative 0.2% month over month. So the direction is towards the downside, even if the timing is off, which means whether it's September or November, it seems like the cut is happening.
So for clients that are sitting in cash, we haven't even seen the FOMO trade yet. $6 trillion of cash potentially coming as a wall of money into this market. And that's really where we could probably get legitimately into some bubble territory. But right now, you take out the top 5 or 10 stocks out of the market, we still have fairly traded PEs and good valuable technology that has a real application today. It's not like it's an unknown thing that we're trying to figure out what companies are going to do with it. It's quantifiable. And so that's a pretty exciting investing opportunity for investors.
Then, does that mean you're telling clients who are heavy in cash, get out now?
Well, we're rotating. Yeah, we have been. And for new clients that come to us, and we're building what I call the repair strategy. If you've been sitting in cash for the last 18 months, that 5% feels good, but feelings aren't, a constructive investment strategy. And so we're rotating people out of cash into, short to intermediate curve of the bond market, balanced with a really great securities portfolio that has both current income and stable growth, along with what we call the innovation kicker, where you would, legitimately pay for a little higher PE for more growth and innovation.
And again, that's why today I was talking more about TNA and IWM, because they feel, Morgan Stanley, it's not just them. Everyone knows this rally, for it to continue, there has to be some rotation. It can't just be Nvidia going to 5 trillion, and maybe that does happen. But if that's the case, yeah, you'll pay higher for you'll pay a little bit more of a premium for good growth. But if there's not great growth, we'll talk about Netflix as well in a bit. The money's got to rotate somewhere, and maybe small caps is the answer to where people are looking to allocate.
But how much? I mean, the star of the show is technology. That's the winner every single week. And it's what's propelled us to these record highs. Nasdaq's up 3% this week. The Dow is down this week. So how much exposure should you have to those big caps?
Well, you know, look, I'm a big believer that like there's no reason to let the air out of the balloon if the party's not over yet. I mean, we're not at this point of where valuations are really reflecting the opportunity. And so we're continuing to overweight tech in our portfolios. But we've been doing that since like the end of December of 2022, when we had a huge pullback. And if investors really take that broader view over a 24-month cycle, where we think we're going to be in terms of innovation trades, the market's going to benefit investors that take that risk right now because the return set is so risk adjusted. This isn't 2000. You know, it's a very different setup. And I really emphasize that anytime I'm talking to clients.
But is it a risk in your view that the earnings don't come through if the economy deteriorates? And maybe we can't say that conclusively right now, but the data is starting to show some wobbling. Consumer confidence today was weak.
I know, which is usually a good sign for the market. I'd put that in the plus column. But, you know, you make a really good point because now we have like, what does the economy tell us? And then what does the opportunity set of innovation and capitalism tell us about the stock market? So I fundamentally separate those two. Economics is the condition in which we should be finding the corridor of opportunity. It's much more narrow right now is the way that I would think about it, or I explain it to clients. That said, the conditions right now mean we're going to have more turbulence, right? We've got political turbulence, which is good typically for 5% price movement, political volatility. We have a concentrated market with innovation leading the corridor. We got a lot of great companies that have been left out that people should be cherry picking. But the way to hedge that is to stay in the United States and to, you know, kind of go big or go home at this point.
I agree with her, dude. I mean, if you're trusting this market, you got to go bigger, you got to go home. That doesn't mean you have to be stupid in terms of how you allocate capital, but it does mean that if there are opportunities like small caps that haven't run, that's something to look at. If there's companies like Nvidia that people will call you stupid for buying at 130, but you realize the growth really isn't slowing down and the market wants exposure and they're willing to pay a premium, which is not even that crazy of a premium when you think about their forward earnings, for something for better growth like Nvidia, then there's ability to get exposure there. So I think she and Bank of America today that we looked at, they're both right. There's a lot of opportunities in the market still, but you've got to be in the market to even find those opportunities versus be hiding in cash. Now, speaking of the political turmoil she talked about, Trump, I don't know if you guys saw this yesterday. Trump put out this proposal, and me and Steve were talking about it last night. We'll talk about it when he joins, to eliminate the income tax and charge tariffs on imports. It's like when we import rice, we charge a tariff to China, for example, versus when I get paid from my job, the government takes income tax for me. I thought it was a very interesting proposal. Now, the probability that passes, I think, is relatively low, but I didn't realize that like we used to do that hundreds of years ago. Like income tax was created originally to fund wars, and then the government got a little greedy and they're like, well, we might as well keep it. Apparently, it's constitutionally illegal. Like when people say taxation is theft, like that's a real thing. Like it actually is theft. It's just we all, via the social contract, agree that like we have to pay our taxes, and if you don't, well, a gun shows up at your door. So it's a really interesting proposal. I do think Trump's just putting stuff out there because it's time to market the campaign. The Biden administration also said today they're probably going to start accepting Bitcoin for campaign donations. Makes sense. I mean, you got to appeal to the crypto crew somehow. So both politicians getting to the point, they're going to debate in 2 weeks. We'll be covering this on this channel on how they can get more people from different ideological groups, whether it's crypto or the anti-tax people, to vote for them. And so you've got a bunch of different stuff going on from a political perspective. It's not illegal because they amended the Constitution to make it legal, unfortunately. All right, well, so it's legal. I was talking to Steve about that. He was like, it's illegal. I was like, what do you mean it's illegal? Like it can't. He's like, well, it's like philosophically illegal. But as you said, they probably amended the Constitution to make it hardline legal. And look, at the end of the day, what the government collects $6 trillion in the United States from taxes. Our expenses are a bit above that. Our debt's at $34 trillion. Our interest payments are going to be $1 trillion this year. Like, unless we stop spending, collecting taxes, whether it's through tariffs or income tax, it doesn't really matter. Now, granted, the math on taxing tariffs doesn't work out to $6 trillion. It's closer to like 2.53 trillion. So there's a lot of money that we make up in between. Does that increase business activity, which stimulates the economy? Maybe, but to the tune of $3 trillion, I don't know. We got to see if that actually plays out, if that passes. Now, granted, the Republicans would have to win the House of Representatives, the Senate, and the executive branch to even have a chance of getting that passed. And even then, it would be really hard to still get it passed. So that's probably not going to happen. But Trump floating out the idea, it's at least innovative. It's getting people to think a bit, whether or not you think it's a good idea or not. Cool. Okay, couple of other things I wanted to say. Oh, so let me do a couple headlines, then we'll talk about Apple. So Bernstein, they revised their Bitcoin price expectation to 200,000. They believe 500,000 by 2029, 1 million by 2033. 150,000 was their earlier price target. Now by mid-cycle 2025, they believe 200K. And they initiated coverage on MicroStrategy with an outperform $2,890. So if you are a MicroStrategy bull, a Bitcoin bull, Bernstein is on your side. Second of all, SMCI likely is going to be adopted to the NASDAQ 100 and Walgreens could be dropped. So in the queues, we likely could see the SMCI start to join. And other companies that would leave would be Walgreens, Warner Bros. Discovery, Illumina, and MongoDB. Mongo just did not have the best earnings, and so they could definitely get out of the NASDAQ 100. And then the final headline is this disinflation headline where we're starting to see a lot more disinflation, and that is really good for rates coming down. So Goldman Sachs put out this note today. Industrial supplies are down 1%. Consumer goods ex autos down 0.2. Food and beverages down 0.7. Auto and auto parts down 0.1. And capital goods down 0.1. This is what I was talking about this morning about the core import prices that were below. I thought that might have been the reason the S&P was down a little bit. That was probably not the reason, but it created, or no, not what the S&P was down. I thought that was the reason why volatility was up. I still don't know why the VIX was up 7% on the day. Where did the VIX end? VIX ended, yeah, it was up 5%. If anyone has any idea in the chat why VIX was up 5%, please let me know. Other than it being a Friday and maybe some indices rebalancing and options expiring. But import prices have come down, which is good because that means PPI will come down. If it's costing us less to import stuff, it will cost producers less to make that stuff, which means it will cost consumers less to pay for that stuff, which means rates will come down and we'll all have the time of our life and hopefully make some money. That's what we got going on. Thomas says, you realize it's just adding cost of the things you buy instead of taking money directly from you. Yes. So if we were to tax TVs, for example, coming from China, and a TV is $1,000, that TV would now cost $1,200. And you would keep all the money you make from your job, but you would pay that $200 extra on top of the TV. I mentioned that to Steve yesterday, and he said in his economic analysis, by the way, there's a really funny story about taxes that I want him to tell you guys when he comes. It's so hilarious. But he said you would still keep more of your money at the end of the day. So net, it would be better to not get taxed from the government and to pay the tariff tax on the product. Granted, I don't think that's ever going to pass, right? But that's kind of the math is like, he says, well, if you keep more of your money at the end of the day, paying a higher price for goods and services is reasonable if you keep your money. So that was his argument on it. Yeah, consumption tax. Exactly. He said it was taxes on consumption. Yes, we will have Palantir Weekly tonight, 11 p.m. We'll have Palantir Weekly tonight as well. All right, let's talk about Apple. I'm going to play this clip. Kevin Simpson selling his Apple calls. Thought it was interesting. Let's hear from him real quick, and then we'll keep going from there.
Covered calls in that name.
Scott, we sold covered calls on the entire position of Apple. And this is something where we knew that the developer conference would be a news event, whether it was going to move to the upside or the downside. And we looked at it with a 14% move in 2 days. So Monday, Tuesday into Wednesday. That's the biggest 2-day move, excluding the COVID crash. And we looked at it and said, all right, can we write calls here and harvest volatility? And we did. We wrote a 3-week option at a $240 strike. So we've got $30 of upside, not too shabby. We brought in $1 of premium, and that annualizes out at an 8% capital return on principal. And if you get an 8% option premium, that's not a bad trade, Scott.
Yeah,
that's not bad at all. If you got some Apple selling that 240 call for a month from now, if you don't think Apple's going to 240, which, dude, I do not think Apple's going to 240 a month from now. Just when you look at how much market cap they would have to add, it's a bit ridiculous. It literally gets them closer to $4 trillion. I mean, if the market's willing to pay you 8% to sell that call, I think that's a hell of a call to sell.
Yeah. So, Brid, what about this week for Apple? The week in which Apple reemerged as a player, so to speak, in this market. You know, for all of the trials and tribulations that the stock has had over the last handful of years at this point, here we are back. It had a new record high this week, and what now?
Yeah, I mean, I think Tim Cook saw that Jensen Wong at Nvidia had a bigger market cap for a minute and said, hold on there, lots of respect for you, but we're just getting started here. I think when you have well over 1 billion iPhone users, and even if each of those additions are incremental, you still have so many people that haven't even remotely upgraded to a 13, 14, or 15. And so I think the market's saying we will get an upgrade cycle. I would say I don't know how quickly that's going to manifest itself. So I love what Kevin did about selling those calls and capturing some of that premium, because I do think a lot now has been priced in. And now over the next 1, 2, 3 quarters, Apple's going to have to deliver actually what the market is expecting.
A lot's already priced in. Gee, I heard that a lot about Nvidia. And I'm not just looking at you, Jim, because you suggested it was priced in before. But look, a lot of people thought that WWDC was already priced in to Apple, okay?
Sure.
Now, it turned out that it wasn't.
Factually
because
correct.
we have a feeling that it's going to lead to this upgrade cycle, and the stocks just had this incredible week. Can you still buy it here? Can you buy Apple after this 9% move this week?
I would not. I would not. And I don't want to sound like a Philistine here, but I applaud Kevin for his move here. Look, I understand that Apple is Apple, but it added something like 300 billion in market cap this year. And Bryn's right. This will probably incentivize an upgrade cycle that might have been a little bit lackluster, but for the Apple Intelligence moniker here. Still, I don't think that upgrade cycle is going to be anywhere near worth 300 billion. AI is real. Artificial intelligence is real. The path to monetization for a lot of companies, not all companies, but a lot of companies, is unclear. And I will tell you that the path to monetization for Apple, I don't think is worth the $300 billion market cap. Now, I will say this, Scott, you always love being able to tease me, and I'm almost certainly giving grist to the mill here. You're almost certainly going to be able to tease me on this, because sometimes sentiment outweighs valuation. And that is likely the case here. But from a fundamental analytical point of view, I'm with Kevin on this.
So I just put a poll in the chat. Let me know what you guys think. Is Apple overvalued here or not? I mean, when you really look at it, dude, we'll have Steve to talk more about Apple in a second, but 300 billion they added with 9% in 2 days, 48 hours, and nothing changed other than, well, the market believes Apple is the portal for consumers accessing AI. Personal opinion. So I'm kind of conflicted on this. When I looked at the conference, I was like, there's not a reason for me to upgrade if I didn't have like the iPhone 15 Pro. I would be like, I don't really care that much about the thing. Then I asked Siri a question today, thinking, for some reason I thought my Siri was like super advanced. And then I saw the response and I was like, dude, it really would be awesome to just like ask Siri something and not have to worry about Siri being dumb and like just giving me the answer. And for a second I was like, well, Siri just popped up. For a second I was just like, well, maybe it really would be awesome. Maybe it would be. Nvidia added $1 trillion in a month. I don't know if that's accurate. I don't think they added $1 trillion in a month. They added like 650 billion or something, which is a lot. But so I don't know, dude. Like 300. What's the poll say? 300 billion in 2 days. You guys said yes. 117 people, 63. It's not being bearish Apple. Rather, it's saying 9% in 2 days, 300 billion added to Apple for them to not even prove the upgrade cycle has happened. Is that reasonable? I don't know. Because if the potential of Apple is as big as Tim Cook is trying to get us to believe when it comes to AI and consumers, maybe it's cheap. Maybe it's actually really cheap. But I don't know. If it keeps growing at 15%, 208, well, it's not growing at 15. Dude, it's growing at negative 2%. It's not growing. That's the problem. Market's expecting maybe 7 to 10% growth on Apple in 2025 fiscal year, but 2024, there's not going to be any growth. Remember, the iPhone has to come out in, they're going to announce it in September. It'll probably be for pre-order in November. So Q4 2024, which will be announced in February of 2025. That's when we see if the upgrade cycle even began to happen. And that's only been 2 months. So you can't really do anything. You have to really wait until basically now of 2025, June of 2025, to get Q1 results in 2025 to see if the upgrade cycle happened. Ask Siri if she's overvalued. That's so funny. That's so funny. Siri, like again, Siri she can't do anything. She can do math. She does like good math, but besides that, she can't really answer any questions. And again, I tried to ask questions today. I was like, man, if she could just answer it, I feel like it would be so much easier to just navigate throughout the day. Which so I felt it. It might be interesting, but I don't know if the majority of people are going to feel it. Nvidia right here, 132 after the bell. SoFi up a little bit, 648 after the bell. Palantir down a little bit. Robinhood again take a hit because what's his name? Bitcoin took a hit, 2247 after the bell, down 0.22%. Celsius, wow, ends below 60. Who bought the Celsius dip? Again, you guys know why I don't like Celsius. I'm not going to reiterate myself, but for those that are new here, I just believe in America, and I think, Fahrenheit is the way to go. I'm not a big fan of Celsius. So that ruined the investment thesis for me long ago. I'm just patriotic. But Celsius right here down 3.37%. It's taking a hit, dude. And one of the biggest bulls on Twitter, I showed you guys yesterday, he's out completely of this. He's like, I'm done, bro. He's like, this thing is up 5,000% in 5 years. I made good money on it. If these sales start to come down, this thing's getting clobbered. So I think you got to have some guts to buy the Celsius dip. You got to really have some guts because those Nielsen sales are scary. And again, the market cap, 13.9 billion. If we look at Monster's at 50 billion. 13 divided by 50 is 26% of Monster's market cap, nowhere near the revenue of Monster. It's something to think about. Something to think about. Spell it. Okay, how do you spell S? No, sorry. No, I was not. It's C. It's C. C-E-L, Cell S-I-U-S. Is that correct? C-E-L-S-I-U-S. Was I right? Yes, I was right. Or at least I was right. That's how you spell the energy drink brand. Is that how you actually spelled Celsius? Yeah, that's how you actually spell Celsius. Okay, cool. Wow, I just became hella Indian there, dude. What the fuck? I was on the spelling bee just now. Look at that. I asked my local liquor store how his Celsius is selling, and he said he never heard of it. Damn. Well, it is in a lot of places. It's not everywhere, but Monster and Red Bull obviously are everywhere. Speaking of Indians, I wanted to show you guys this clip in the morning, but I forgot to do it. This was the funniest moment of the of the shareholder meeting for Tesla, and let's just watch it for 2 minutes because this was hilarious.
Kids love it, really. My 4 and 6 year old, they love it.
He's talking about the Cybertruck. His 4 and 6 year old love the Cybertruck.
Exactly. That's what I was saying. Kids, it's like amazing. It's like
I went to Disney last week. Nobody looks at Disney. Everybody looks at Cybertruck.
Yeah.
There's a funny story, if you may allow. So
first of all, he's bringing up Disney. Elon told Bob Iger to go fuck himself. All right, so that already is a little bit awkward, right? Bring up Disney. Number two, if you allow a story, dude, you're talking to the world's richest man building the most amazing company on earth, and you're asking him during a shareholder meeting to tell a story. I mean, this is why Indians are winning, dude. We got some balls. We have some real balls to say that shit in front of Elon Musk, in front of all those people.
So we were preparing my daughter. We went to Destin, and then from there we were driving to Disney, and then we were preparing my daughter she's 4 years, to just get used to the lines, and you have to have a lot of patience to get in the line. And she's like, Dada, why don't we just say we'll show you our Cybertruck and then we'll cut the lines? I mean, she got used to it because we were driving superchargers, and then everybody was coming over taking pictures.
Sure.
It's a funny story,
Yeah.
Yeah. And then I have a request.
Dude, that part had me dead yesterday. He's like, it's a funny story, isn't it? And Elon's just like, sure, it's a it's like, it's a funny story, right? It's like, no, dude. First of all, the delivery was horrible. It was not a funny story. You had a decent punchline, but you didn't really deliver on the punchline. You didn't set up the story that well either. And there's no real energy in the presentation of the story. So bad story, bad presentation, not funny, no punchline. You're wasting Elon's time. But I respect it because you're Indian, and in this country, the reason we're succeeding is because we'll ask Elon for 30 seconds of his time at a shareholder meeting to tell him a story about our life that he probably doesn't care about, and he has every right to not care about it because he's Elon Musk. He has other things to do. But I thought that was hilarious. Show the guy who pitched Elon. Okay, this part was also hilarious. There was a dude who literally pitched Elon. This was the last question on. It was he's an Asian gentleman. I don't know if he's Chinese or not, but he starts pitching him on this idea for a platform, and Elon's just like, "What is going on?" All right, so I'll play this, then we'll call Steve right after.
FSC team, but I don't know whether it reached you or not. Basically, as FSC keep on improving, we are not quite sure at what rate it will be improving the march of lines. So so a lot of skepticism remains. as to when you can exactly operate the robot taxi. So it occurred to me that in between supervised FSD and robot taxi, there is something intermediate stage that's commercializable, which is what I would call a robot rental car. Okay, the idea is that you would people would go to your platform to order a rental car, and you would deliver that overnight to the front of their driveway, and then so the only time that that car will be driving without.
Does anyone understand this pitch so far? Because I don't get it yet.
Other person is at night with nobody, and you can take as long as you want, and you drop in the front of the car, and after that it's supervised. So that will get you to a commercialization much sooner, much more guaranteed. So that's my suggestion.
All right. Well, I appreciate the thought.
Elon's trying to be nice about it, but dude, it's just hilarious. It was great. Either way, it was a good shareholder meeting. Elon got paid. Stock fell a little bit today, but I'm happy Elon got paid. I thought Tesla shareholders would ask some different questions, but I get it. Like when you're in front of someone who's like your idol, you'll start just saying random stuff. The Indian story though was horrible. It was just not a good story. Not a good, in my opinion, not a good. No offense to his daughter or anything, but I mean, he had a good premise of the story, but he didn't deliver. I would have framed the punchline a lot differently. I would have even mentioned Elon said to go F yourself to Bob Iger. I would have found a way to like make that happen because it would have been awkward enough to make it funny. I don't think he thought it through. Okay, let's call Steve, and we'll keep talking about Tesla and everything else that's happening in the markets. My phone is actually charged right now. I'm really happy. Usually my phone is on like 10% right now.
Your call has been forwarded to an automated voice messaging system.
Steve told me 425, and now he's not picking up. Let's call him again. He's probably like trying to get his stuff together. Pokemon card, here we come. Oh my God, dude. That's going to be hilarious. We'll try not to discuss Pokemon today. I should get him on Palantir Weekly today. To discuss. So there's okay, hold on. Steve, you there?
Hello.
Are you good? Do you need me to call you in 5 minutes, but like to get more comfortable, or you're good?
Can you give me 1 minute?
Yeah, I can give you 1 minute. Dude, I'm the expert at never mind. I was gonna say something else. All right, yeah, take a minute. I'll just put you on mute. Yeah. Okay, cool. So yeah, we have to talk about this tax plan. We have to talk about Tesla. Steve bought some more Tesla today, and then we have to talk about Apple as well. Did you see Trump's interview with Logan Paul? Yeah, I saw it, dude. I mean, again, Trump is out there. He's marketing. Trump is marketing. The Logan Paul podcast did extend the interview request to Biden. Biden has not officially said. I don't think Biden's answered it. But Trump's out there, man. He's marketing. The kids listen to Logan Paul. And so you got a bunch of 18-year-olds who can vote for the first time. They think Trump's cool. Here's the thing about voting for Trump this time. In 2016, you were a racist if you voted for Trump. In 2020, you were against democracy if you voted for Trump. Now I feel the narrative has changed. You got people like Michael Rappaport wanting to vote for Trump, that the social stigma of voting for Trump has started to decline a bit, I think, in this country. I could be wrong on that, but that's what I'm feeling. And I mean, Logan Paul is a liberal, dude. He's a Democrat. He's a Democrat. So for him to embrace Trump is kind of like him being like, all right, fuck it. We'll talk to Trump. Steve finishes his 420 blunt. Dude, Steve, I called him the other day. He was smoking a cigar. Steve, I was just saying, I've never smoked a cigar before. And I was saying, you're going to teach me how to smoke a cigar one day.
Yeah, I mean, it's not that hard. You just breathe in and breathe out with a cigar in your mouth.
But you have to blow, right?
You breathe in the smoke and then you exhale.
Steve, you are here with me.
You think you're that slick? Come on.
No, you got to suck on the cigar, dude, to breathe in with the. All right, so we got a lot of stuff to talk about. Someone said Amit will puke 100. Did you puke your first time, Steve?
No.
Okay. I hope.
And I don't think that you're going to puke. I'm not giving you a freaking heavy one. I'll give you a Connecticut wrapper with a light filling.
A Connecticut wrapper?
Yeah, there's all different types of wigs. Connecticut.
Do they rap about their experience going to Yale or something? Like, what do they talk about?
You know, they actually don't really call it Yale. They just say New Haven, but you know.
Connecticut wrapper. Why is it called Connecticut? It's from Connecticut?
Because it's the color of the wrapper. It's a lighter color. You can Google this later. Don't bore the audience.
Okay. Okay, so we have a lot of stuff to talk about. First thing I want to talk about is this Trump tax thing. So I call you last night and I'm like, hey, I'm like, wait a second. Trump says he wants to tax tariffs on imports versus income tax. I didn't understand this. I didn't get it. You broke down the math. I want you to break down the math for people. But before that, you mentioned a story to me last night. And you even emailed me something that has to do with that story. I want you to tell the story, or I can tell it. It's up to you. And then we can go from there.
I really don't want to talk about this.
Okay, so can I bring it up? Because it's a really funny, like, it's... it's... Okay, I'm just going to say it. It's because Steve's too nervous to say it.
Well, I'm not too nervous. What, that I don't like the tax code? And I think
no. You know what I'm talking about. You know what? Okay, so let's just say Steve hates taxes so much. One day he got drunk.
No, it's not that I hate taxes. I don't think the tax system is fair.
Okay, he thinks the tax system is so unfair. One day he got drunk and he wrote an 11-page thesis on why we should abolish the IRS.
That may or may not be true.
Dude, this this blew my, and then he sent me it and I was like, I don't understand. Dude, I got drunk like last week. I couldn't walk straight. I just fell asleep. You wrote a thesis on taxes. I mean, it's the coolest way to get drunk ever. That's it.
Yeah, I mean, look, I think that the income tax structure could be created much better. And I think that it is unfair to have tax brackets for the simple fact that everybody's using the same municipalities, the same roads, the same everything. Let's tax on consumption, have a flat tax on everything you buy, excluding food.
Okay,
and
so the reason I wanted to bring it up is because the only reason I'm bringing this up, other than it's hilarious, is that you have thought about this deeply, even if you were intoxicated. And so you've spent a couple of years really thinking about this. So Trump says no income tax tariffs. Yay or nay on the idea?
Yeah, I think it's a good idea to implement tariffs, but I haven't had time to really go through the numbers, but I don't think any way you can create enough taxes on tariffs to eliminate income tax. You may be able to offset some of it.
Is it constitutional what he's trying to do?
Yeah, absolutely.
And the reason for that is because you think taxing income is actually unconstitutional, correct?
No comment.
Okay, but basically you're saying that there is a sentiment, at least in America, that people feel it's illegal, it's kind of theft when the government steals from them. And this would be Trump kind of giving back a lot of money to people and putting the burden on other people, essentially.
I think it would be pro-American business. And look, I would rather buy American and support our countrymen. And I think that it would be good because it creates a better stage for American companies to compete in. So I am all for tariffs on foreign goods.
Do you think it would
want to sell your product in the greatest consumer nation in the world? There should be a big debate.
Do you think it would increase inflation though if it's taxation by consumption?
No.
But why not? If a laptop is more expensive because it's tariffs are taxed.
It'll even itself out because if you're making, we're just going to use even numbers. Okay, if you're making $100,000, you're not paying income tax. You're keeping more money of it. But if you're spending $100 on something, you're going to get taxed 20 or 21%. It evens out. You just pay on consumption. So Jeff Bezos, who built a $500 million yacht, is going to pay on consumption. You know, it will even out, and based on our GDP, you can make the numbers work.
Okay, that's fair. All right, so let's talk about Tesla. A couple days ago, you called me. You're a bit annoyed by everything going on in the world of Tesla. Yesterday, Elon says Tesla's going to 30 trillion. You did buy more Tesla today. Why did you buy Tesla, and what is your sentiment now on Tesla?
Yeah, I'm pretty happy. And look, I may have purchased more at the wrong time, but if I did, I'll just have to buy more again. I mean, I'm pretty happy right now because I really did think that there was a chance that this wasn't going to go through and Elon would just spend less time with Tesla, which would not be good for shareholders.
Do you think the 25 trillion, I want you to be honest here, is at all reasonable around Optimus?
Yes. But I say yes with it's not feasible by 2030.
Agreed.
You know,
Agreed.
if we want to say something like 2040, yeah, I don't think anybody can say yes or no, but we can't prove it. But I think there's certainly a case to be made when you think about the application and how much demand there would be for it. I mean, that's why I became a Tesla shareholder. I think the Optimus bot is going to blow the car business out of the water, and I could care less about the car business.
So when do you think he goes up there and starts waxing poetic on the stage just to appease shareholders who are giving him money, or do you think he genuinely believes he could do $1 trillion in net income on Optimus?
I think it's I think it's a combination of both. I really do think he believes that he can do it, and I think that I believe he can do it for the simple fact when you start looking at the numbers and how big Walmart and Amazon and all these places are, and the amount of different applications for a robot workforce for some manual labor jobs. I mean, not to mention the consumer application for placing one in your home. I mean, we're not talking about 150 grand for a robot. We're talking about a $20,000 to $25,000 price point, which they're going to have financing. It's just like buying a lower end car.
Yeah, no, it's fair. And so you don't agree with the FSD getting to 5 trillion, but you think Optimus is the winner here.
I don't know if FSD doesn't get to 5 trillion. I don't think FSD gets to 5 trillion by 2030.
What do you think about people that we just played a clip from a guy in Yahoo Finance who says Tesla is the next Enron. I mean, when people say that type of stuff.
I listened to that on the way home today.
Okay, what were your thoughts when you heard that?
It came into my YouTube feed. I mean, to say it's the next, and look, I'm a reform bear, so I have argued the point that Tesla is overvalued. And if you look at the fundamentals, Tesla today is still overvalued based on what they are currently earning. Okay, I'll be very clear about that. But Tesla is really not about. It's never been valued based on the right fundamentals from a lot of investment standpoints, and it's kind of like an Amazon story. But to say that it's the next Enron when Tesla actually has tens of billions of dollars on hand as cash, and they're free cash flow positive, and they have all these other synergies and things that they're working on. And let's not forget, they can always issue more shares and create a stock sale, and there's going to be no shortage of buyers. I don't see how you can say it's the next Enron. You can certainly say that it's overvalued, and I don't think anybody can give you much flack on that. But to say it's the next Enron, a little hard to say that.
Yeah, I agree. I think someone's. I think people like that are chasing headlines, but I think when Elon says it's going to 30 trillion, that's where people feel like he's just pumping, which he is, but it's not crazy.
But did he give a time frame?
No, he did not.
So then you can't really complain that much.
Yeah.
It's not like ARK Invest saying it's going to 10 trillion by 2029.
Right.
And look, I'm a shareholder. It benefits me greatly if it does that. I can't make the math work.
Why today did you buy more shares?
I wanted to finish off the position, and I ended up moving a few things around in one of my accounts. And yeah, it was under my cost basis. And I was like, you know what? I'm not going to quibble about a couple of bucks. If it ends up going into the 160s or 150s, I'll just buy more shares, whatever.
Yeah, if it really does dip back to 130, 140, if you're a bull, it's a buy the dip, right?
Yeah, I don't know if it will. Right? And I think there's going to be a lot of hype. And you got two big things. You got earnings coming up in the middle of July. And then you got the robo-taxi day in August, which I'm not bullish on. But if he says the right things, and if they actually have the right things, it could be a huge catalyst. So.
Okay. We got a new article, guys, by Steve. I'm putting in the chat right now. Please make sure to click.
And I should have picked a different title.
Let me set up the title. Okay, so he's channeling his Dan Ives. The king is back in the race to 4 trillion. What would your new title be?
It should have been The Ruler's Back after the Jay-Z song that I sent you.
Interesting. Well, that wouldn't have been bad. I don't know how many people in finance would have got the reference, but yeah, I think it's still a good title. The king is back in the race to 4 trillion. So, Steve, Apple adds 300 billion in 2 days. You think this thing's heading to 4 trillion. What is Apple cheap right now?
I don't know if it's necessarily cheap, but it's certainly not expensive.
Well, hold on. You can't say it's going to 4 trillion. And I ask you, should I buy it at 3.3? And you're like, well, I don't know.
That's not what you asked me. You asked me if it's cheap.
Well, if it's going to 4 trillion, 3 is less than 4. So I would argue that means it's
what
cheap.
I'm saying is it is not expensive in my opinion.
So it's cheap.
I think it goes higher.
Okay. So what is the bull case given what you saw at the AI conference for 4 trillion?
I mean, look, I've been wrong on several things, like everybody. Apple's not something I've been wrong on. If you go to my Seeking Alpha profile and you type in AAPL, you're not going to find an article that has been anything but bullish since 2018. So when people were running and hiding, saying Apple's dead money and et cetera, I was saying the opposite thing. I really think that they did the best thing possible at the WWDC 24 conference, and they just created a reason why everybody's going to need to upgrade their hardware. And we haven't even seen the applications that are going to be built on top of iOS 18 or the new Mac platform. And there could be a resurgence in services growth also, which is on its way to have $100 billion revenue run rate in their 2025 fiscal year.
Okay, so you think the upgrade cycle is coming, and based on what you saw in earnings, I mean, I'm looking at this chart right now. Services.
Oh, it's 100% coming. I'm buying a new phone. I'm buying a new iPad Pro, and it's coming.
Okay, so talk to me about services. Why did you include these charts here about services?
Yeah, so I don't think people realize that Apple created this business unit out of thin air a decade ago, and it's almost $100 billion run rate, and it just keeps getting bigger. There's only been 3 quarters out of the past 25 quarters where revenue growth on services declined. It just keeps getting bigger. And that's on a quarter-over-quarter metric. On a year-over-year, it has only gotten bigger. And we haven't even seen what type of packages they can put together when they actually have AI out for 6 months to a year and Siri gets refined. They may have another tier for bundling AI services that could be an extra $5 a month to a package that people will pay for. There's a lot of runway left on that business, and it's a high margin business.
So this move on Apple the past 2 days is the largest 2-day move since COVID.
And it's deserved.
Well, do you think there's a better entry point than 213, given that's a pretty rigorous move?
Listen, Apple could retrace to 180. What do I know? It can retrace before it goes up. People could take profits. You know, there's a lot of things that could happen. But if you're a long-term investor, I don't think it matters. Whether you get in at 213, 205, if you think in a couple of years it's going to 250 or 300, does it really matter?
Oh, that's fair. That's fair. That's a fair point. I mean, that's your logic with Tesla.
Remember, I'm not a short-term investor. When I invest, I'm looking at a 5 to 10 year horizon. So to me, it's like
how long have you owned Apple?
Oh, geez, I'd have to go into the accounts and look. A while.
It's been like a decade, I imagine.
A while.
The shares outstanding. This is going down. Do you think? Well, here's my deeper question for you. They initiated $100 billion in buybacks. Buffett sold 13 million shares last quarter.
Yeah, Buffett wanted to raise cash. So what?
Do you think at all the 100 billion was? I mean, this is a theory that I saw going around that they created the $100 billion buyback plan because they feel Buffett's going to liquidate more and they need to give him liquidity for those shares.
No, they've been doing. They have spent what is it? I don't have the article. $658 billion in buybacks since 2012. I don't think it matters. The conspiracy theory is just that. It's conspiracy theory. I mean, this is what Apple does. They've been buying back a tremendous amount of shares in addition to paying a dividend, in addition to investing for their future. They hemorrhage cash. Hemorrhage may not be the best word. They make so much cash, they don't know what to do with it. This is a company that makes $100 billion of net income every year for the past 3 years. They make their most profitable company. They can do whatever they want, and buying back their own stock is great for shareholders. And when you combine that with probably a multi-year upgrade cycle for hardware and then catalyst for additional services to be purchased, the earnings projections going forward could be a little light. And this could this could beat analyst estimates, and this thing could just keep going higher for years to come.
What's the bear case for Apple, in your opinion?
Yeah, I mean, the bear case is we go into a recession, the Fed doesn't cut rates, businesses don't expand, consumers have
not those macro bear cases, not the macro bear cases, the Apple bear case. What happens where Apple falls and lags the S&P?
I mean,
is there one?
Alphabet actually does something special and people flock to Android. I mean,
oh, wow. So you really don't think there's a bear case here? You think, I mean, outside of the macroeconomic bear case, you think this upgrade cycle is coming?
I think the macroeconomic is way more plausible than Android taking away iOS users or somebody coming in with a tablet that makes people, like, here's the thing to remember. The Apple ecosystem, I mean, really think about Apple customers. They're like a cult. They're like Tesla shareholders. They are like a cult.
Yes.
And I don't see people, and I know a lot of people, I do not see people who switch from Mac to PC on a computer side, and I really don't see people switch from an iPhone to an Android phone. I am probably one of the few people that uses a PC as my computer, but uses an Apple product for my phone and my tablets.
And you are not all worried about OpenAI?
No, why would I be?
What
does OpenAI have to do with Apple's hardware?
If they mess up the customer data with Siri and training.
I mean, come on. Like, I don't know. I think all of our data is out there anyway, so I'm not too worried about what Elon had said about it.
So you've embraced we're living in 1984 already. You don't care.
We've been living in 1984.
Yeah, well, it's a fair point. Okay, cool. I want to ask you about GameStop. So I had a theory last night, or someone pitched me a theory on Twitter last night. I want to get your take on this theory. I kind of think it's better than your Pokemon theory, but I wonder what you think. What if Ryan Cohen, who has $4 billion in cash, says, screw the legacy business, he liquidates everything, maybe raises another $1 billion in cash, and he turns it into
and he becomes MicroStrategy?
No. Well, part MicroStrategy, part Berkshire. What if they become a holding company and shareholders now trust Cohen to become the next Warren Buffett, but like a tech Warren Buffett, you know? Like,
okay, but that's not the right person to compare him to, because Berkshire has 70 underlying businesses.
Well, that's my point. What if GameStop invests in businesses and it's a holding company, and everyone is like believes in Ryan Cohen and Roaring Kitty's on the board, and they try to strategically invest in companies, and you're investing in a KKR, a mini KKR, essentially.
I could see them becoming a business development corporation before Berkshire. Like, you got to remember, Berkshire owns Geico.
Yeah.
Berkshire owns Duracell. Like, they own companies you wouldn't think of, Fruit of the Loom, et cetera. Like, they own the entire company outright, in addition to the stock portfolio. But a BDC, which a business development corporation, has really two main functions. One, to lend money, because small to middle market businesses have a harder time getting loans from traditional financial institutions. Two, they also take equity stakes in companies. So yeah, that's definitely a possibility.
I mean, I like the legacy GameStop business is kind of trash. We all know no one cares about it anymore. I wouldn't invest in Ryan Cohen's like pseudo hedge fund, but I think a lot of people would. And he did build Chewy. He built $1 billion business. Not like the guy's a scrub, you know? So I think
that people would be interested. I think people are going to be interested in investing in Pershing Square when that takes public too.
Yeah, it's kind of like a mini Carl Icahn if GameStop did this. What is your take on Pershing Square? Would you buy Bill Ackman's fund?
Yeah, I think there's a good possibility I'd become an investor.
I mean, I thought it was interesting. Is it what concerning that this guy's trying to get liquid on retail by bringing his fund to the public, or you think it's a good fund that deserves to be public?
Well, I would need to read through the prospectus and see what the plan is, what they're holding, but I wouldn't be opposed to it. I'll at least consider it.
Yeah, I mean, it's concentrated at Google, Chipotle, and Hilton, so I don't know if I would be excited about that, but you would have to trust their private stake in UMG. That would be something they potentially use as an incentive to invest. Okay, SoFi. The Middle Eastern friends in Qatar sold 20 million shares. I don't know if you saw Noto bought 30,000 like a couple hours ago.
Yeah, I got texted about it.
You got a text about it? You got a notification?
Yeah, like that wasn't like Noto wasn't buying today. Come on.
I mean, dude, 30,000 shares is not a lot of shares, is my opinion on this.
Still, he's not selling. He's still buying.
I get it, but dude, if he sold, the stock's going to like $2. If Noto sold a single share, it's not like Alex Karp who can dump 300,000 shares on a random, like, dude, if Noto sell, I don't think he's ever sold a share. Like,
no, if Noto sells that way, unless it was a planned sale for tax reasons, it would be a problem. It'd be a big problem.
Yeah, and I don't think he has any planned sales or automatic. He doesn't have any 10B1 schedule. Okay,
but
so
unless he did, that would be the only way that it would be acceptable for him to sell at this point.
What is your take on SoFi? What's happening? Why did the Saudis or the Qataris sell?
I don't know, and I don't care.
You don't care at all as a shareholder why the Qataris?
No.
Why?
Because SoFi has fluctuated up and down, up and down, up and down. I sleep just well at night. I don't care until management gives me a reason not to be confident in the thesis or them. Everything else is just noise because I'm not investing for next week or next month. I'm sticking with SoFi for at least 5 to 10 years unless they give me a reason not to. I mean, Crystal Point went to one of the big conferences early in the week and reiterated the fact that they're going to generate between 55 cents and 80 cents of EPS in 2026. What's 55 cents on the current share price wherever they close? That's like 14 times forward earnings. That's crazy cheap.
What would make you change your mind about this company?
If Noto leaves, if Noto sells, or they come out with a revision where they're not going to come anywhere close to 55 cents on the low end, I would start to re-look at things a lot differently.
Okay, that is fair. I want to ask you about another one. Netflix had a 3%
You know, that's the only one that I don't own at this point. No, that's not true. I don't own Microsoft. I don't think I own Microsoft. I got to check.
I mean, dude, it recovered so nicely from that dip to 550 after earnings to 670, up 42% year to date. Is there a thesis on Netflix at these prices?
Listen, that's one of the things I've been wrong on. Even though I haven't been investing, I haven't written an article about it. I have probably said in an AT&T article somewhere that I think Netflix is overvalued. I mean, I felt Netflix had been overvalued for a long time, and I've obviously been wrong. But when you look at their revenue and their EBITDA against Warner Brothers Discovery, yeah, the Netflix financials don't make sense to me versus the market cap.
Why?
And I think it's a crowded space.
Yeah, but it's crowded, but it seems like Netflix keeps winning. Like, why do you think that's?
I can't find anything on Netflix to watch.
I mean,
like,
me either.
Listen, when I sit there at night, I recently got rid of Hulu because there's only so many times you can watch Sons of Anarchy or something like that. But I have Netflix, I have Prime, I have HBO Max, YouTube Premium. I would say 6 out of 10 times that I have Netflix on, like I'm trying not to exaggerate by saying 9 out of 10 times, but 6 out of 10 times, after 5 minutes, I end up going to either YouTube or HBO Max.
Dude, that's me 10 out of 10 times. Like literally 10 out of 10.
I'm trying to be nice.
But granted, you and I are not the majority of people watching this stuff. And so, I mean,
probably
people still watch it, right? Like this.
And I'm not saying people don't watch it. I'm not saying that there isn't a place for it. I'm just saying that I'm typing it in right now. So it's a $281 billion company, okay? And their EBITDA.
Yeah, let me know in the chat, guys, if you watch Netflix or not. Most people are agreeing they don't watch it. Dawson's Creek is the best thing ever if you guys want to see something good.
You need to stop.
Dude, Dawson's Creek. It's on Amazon Prime if you guys don't have Netflix.
Please stop.
Dawson's Creek is the best show in the history of television, cinema.
Stop.
Season 6 was kind of bad, but the first 3 seasons, oh my God, best
So,
TV on the planet.
Netflix has generated 22.8 billion in EBITDA over the trailing 12 months. And what has Warner Brothers Discovery generated?
Yo, put in the chat if you've actually watched Dawson's Creek, dude. There's got to be some people in the chat who've watched this shit. It's a 1998 teen coming of age.
So I actually need to get Excel open now because this is going to drive me crazy. I don't want to give bad numbers, but Warner Brothers Discovery could be so undervalued. It's crazy. So they've generated 21.6 billion in EBITDA. And their market cap is less than 10 billion, I believe.
No, their market cap's 17 billion. Warner Brothers.
Is it 17?
Yeah.
Hold on. Oh yeah. Okay.
This stock has been horrible, I think, for a long
Horrible.
time.
I have it. I've been holding it since it got spun out from AT&T, and I'm just like waiting for somebody to acquire them because of how undervalued it is.
Shout out to Misty in the chat. They said they love Dawson's Creek. Thank you for someone finally loving Dawson's Creek. Okay, so moving on
I can tell you, I've never actually watched an episode the whole way through. I may have watched like half of one episode one day.
You should watch it tonight, bro. It's good.
Yeah, no,
it's good.
Not happening.
You'll enjoy it. It's a bunch of like kids growing up and figuring out who they are and developing their personality. Like I thought it was a phenomenal show.
I can tell you 100% that's not happening.
And also, what I really loved about it is there's no Snapchat, so it's people falling in love without having to like text each other. Like they have to actually like go across a fucking creek to like see the girl. You know, I thought that was so romantic, and it'll make your heart smile. I really think it'll make your heart smile, Steve. It'll make you want to do something for your wife romantically. That's what it'll make you want to do. It'll make you feel like you're 18 again, you know, first girlfriend. Anyway,
it'll make me feel like I'm 18 again.
Yeah, you'll want to take your wife out on a date for the first time. Like it'll be good. What was I gonna ask you? Someone just said Dawson's Creek is gay. I mean, it kind of is. But, what was I gonna ask you? Disney. Are we buying Disney at $99?
No, I'm never buying Disney. I could care less about Disney. So
I thought you owned Disney.
Follow them. I don't want Disney. Don't want to know about it. Don't care about it.
Why? Why don't you like Disney?
Just not into it.
Why?
I don't think the parks is a great business, and the content is old. I am just, I don't know. Doesn't do anything for me.
I've had a bearish thesis on Disney and Netflix for 2 years. Disney was the one I was right on because the content actually does suck and no one like watches Disney Plus besides like
except for Marvel and Star Wars, they have no content.
Yeah, but and after you watch that, like what is there left? You know, there's nothing.
I agree.
But Netflix, I was wrong on. Netflix, people kept watching it, but Disney, I felt no one would watch it. And it's not like no one watches it, but their subscriber numbers are going down. The parks business, I also was never excited about. I mean, there's so much expenditure.
Too many, it's just not something I don't know.
Yeah.
But, okay, so Netflix and Warner Brothers, this is actually crazy because they generate basically the same EBITDA, and Netflix trades at like 15 higher multiple. It's actually wild.
Netflix and Disney? Or Warner Brothers?
Yeah. Netflix and Warner Brothers.
So Warner Brothers is cheaper, is what you're saying?
Yeah, I mean,
technically, it's a little cheaper.
Warner Brothers generates more EBITDA than their market cap.
Why does the market not respect this thing? Like, what is the reason why? It does have a lot. It has to have a lot of debt, right? That has to be the reason.
Yeah, but it's going down. So Netflix trades at a multiple of 12.66 times its EBITDA, and Warner Brothers, which has a 17.74 billion market cap, generated in the trailing 12 months. I'm checking again to make sure I'm not like reading this wrong. They generate 21.66 billion in EBITDA. They generate more EBITDA than their freaking market cap.
Dude, the Derpy Rock just said they have 42 billion in debt.
Yeah, but it's going down.
I mean, look, if you weigh 400 pounds and you go down to 390, you're still gonna have a heart attack. That's, dude.
You can't prove that. You can't prove somebody's gonna have a heart attack.
It's a metaphor, Steve.
You can say it's more probable.
42. Why do they have so much debt? What are they? What is going on here?
When they spun off from AT&T, they took on debt, et cetera, et cetera, et cetera. But if you look at their total debt, they had $49 billion at the end of 2022. They had $43.7 billion at the end of their last fiscal year. They're paying down the long-term debt.
Yeah, it's just a question of why would you? There's so many opportunities. Why would people get excited about something?
Oh, I'm not saying that this is a buy or anything like that. What I am saying is, based on how much EBITDA they generate versus Netflix valuation doesn't make sense.
Well, yeah.
Take balance sheets aside.
Netflix valuation never made sense. Ever never made sense. And now they're going to hide the subscriber numbers too, which is going to be great. So, although that was a moment of irrationality, dude. I think the only reason it tanked was because they said we're going to hide subscriber numbers. It tanks 30%. Now it's up. It's a quick 30%.
Yeah, I think people are worried about the NBA deal and spending $2 billion in a bidding to get the NBA rights back. I think there's a lot of assets. I think that this could be acquired, but I think the bottom line is that that's probably why I've never bought Netflix, because of just how rich the valuation has always looked to them. But obviously, I've been wrong because it's gone up.
I've been wrong too. I was always bullish Google over Netflix, and I mean, technically, if you're bullish.
Same
Google,
here. I think Alphabet is still probably the most. Well, Amazon may look like the most undervalued of big tech right now, but Alphabet's right up there. Looks very undervalued.
All right, let's end on this, and we'll end it for the chat as well. If you had to buy one of the big seven for the next decade, yes, Zocold, he talked about SoFi. He said he doesn't care that the Qataris sold. What would you pick? Put in the chat. One of the big seven for the next decade. So 20, what are we looking at? 34? Take your time. But one of the big seven. It's hard, right?
That's one of the hardest questions I've been asked in a month.
Good. That's what I should do. I should ask hard questions.
Like, really think about that. That's really hard because you can make a pretty good case for any of them.
I don't have my answer yet. I thought I would have my answer immediately. I think I know what I'm going to pick, but I don't have my answer yet. I think, dude, this is actually really hard. Put it in the chat, your logic as well. Put your logic. Okay, how about we start off with one of them we wouldn't pick, because that should be easier, right? So I'll start with the one I wouldn't pick first, and then you can give me the one you wouldn't pick. I wouldn't pick Microsoft.
I don't know how you can say that.
If you have to pick, dude, you like I need to eliminate at least one. So eliminate.
I don't know. I don't know how Microsoft's the one you automatically don't pick.
Oh, it's micro. It's.
No, think about it. Azure continues to grow. Okay, they're going to be a leader in enterprise services, from AI to cloud service infrastructure. You have a huge upgrade cycle coming with the next Windows, with Windows 11, because Windows 10 goes out of.
Okay, but you have to pick. You have to pick. I was like,
I'm just saying, it's not an easy question.
I'm not riding with Satya. So give me one you wouldn't pick. Don't pick Microsoft. Give me one you wouldn't pick right now. We'll walk this step by step. We'll go step by step.
I mean, I almost, even though I don't know how you don't pick Microsoft.
Just give me the one you would eliminate first.
Yeah, I guess I have to eliminate Microsoft with you, even though I think it's ridiculous because I'm not a shareholder.
So you just lectured me and then you agree with me. Okay, cool.
No, but I'm just saying I don't know that I could pick any of them. But if it gun to my head, it would be pretty crazy for me to say anything else, considering that's the only one out of those seven I don't know.
Okay, so Netflix is gone for both of us. Now we both have to.
No. You said Microsoft.
Sorry, Microsoft.
Netflix is not part of the Mac 7.
What are you talking about? They have the Bridgerton. Of course, they're part of the Mac. No, I'm just. I haven't. Have you seen Bridgerton?
No.
Dude, I haven't seen it either. Everyone watch it. Like, why do I want to watch some medieval fucking show about? Anyway, besides Microsoft, so I'll pick the second one I would eliminate. Okay. Let's see what you say about this. You're gonna hate me for this one too.
I know you're gonna say Apple.
I'm not going with Apple. But I didn't say them first. I said Microsoft first, so you can't hate me too much. But I'm out of Apple. So Apple and Microsoft.
So I don't know if that's.
Watch Steve agree with me again, bro. Watch him agree.
No, in all seriousness, I don't know if that's a horrible call, because when you put them against these other companies, I would probably agree that they have less upside potential from where they are now to where they would be in 10 years in some of these other companies. I mean, completely plausible. I mean, I'm going to roll with you again on this one.
Okay, Steve, I think I this is going to be funny how this plays out, because I think we're going to end up agreeing.
Go with the next one.
Okay, so the next one, we got rid of Microsoft, we got rid of Apple. Let me put up a Google Doc real quick, just so I can see what people have to find. This is strategic, dude. I see a lot of names of what you guys. Someone said, "Amid, how dare you short the company with another South Asian CEO?" Don't a bunch of them have South Asian CEOs? Okay, so Microsoft gone, Apple gone. All right, Steve. The next one that I'm eliminating, you're gonna hate me for this, but it is what it is. I don't think the metaverse is going to become real, even though I love the advertising business, but I'm taking out Meta. Taking out Meta.
Yeah, I'm not rolling with you on that one.
Okay, so what's your next one that you would take away? I'm at least taking Meta away.
Alphabet.
Ah, okay. What's the logic there?
Even though I think it's the most attractive from a valuation standpoint, not kicking Zuck to the curb just yet.
But I mean, like, okay, so you believe in Zucks over Sundar then?
100%. Any day of the week, no question about it. I'm putting my money behind. Yeah, I have way more money at risk with Meta than Alphabet anyway. So.
Okay, well, my next one is Google. So I mean, you can give me your next one. My next one's Google. It's probably gonna be Meta, isn't it? We're two peas in a pod, bro. I think we both know what we're gonna pick. I think we both know what we're gonna pick.
Yeah. I mean, yeah.
Okay, so Meta's gone for you. All right, Meta's gone for you. Okay, the next one, I think you're gonna have to agree with me, because it's gonna come down to two of them, and it's gonna be a hell of a choice. But the next one, I think we both agree, Amazon's gone.
No, Tesla.
Oh my God.
Because there's too many. So I gave Tesla this high of a rating because of how much potential it has, but I'm not giving it a top 2 slot because of how many things have to go right.
Wow. I did not think you would do that. That's pretty tough. All right, so Tesla's gone for you, Amazon's gone for me. I did not expect that. Didn't expect that. Okay, so for me, I have 2 left. I have Nvidia left, and I have Tesla left. For you, you have Nvidia, and you have Amazon left.
Yep.
So if I have to pick between Nvidia and Tesla, well, I'm picking Tesla. Nvidia's gone. I thought I would pick Nvidia in the beginning. I really did. And then I asked myself, over the next decade, 10 years, who do I trust more, Jensen or Musk? Probably Jensen's going to pull it off, but I'm going with Musk. Musk.
And I'm kicking Nvidia out at number 2.
Yep, I had a feeling you would do that.
Because I just think that there's too many things that have to go right for them to continue this for a decade to put them above Amazon. I think Amazon is my number 1 because of how much growth they have and them being the first $1 trillion revenue company.
Yeah, so bring that. Give me some more light about that. Why Amazon? Why this one?
Yeah, I mean, Amazon's projected to generate $1 trillion in revenue in 2027 or 2028. The news cycle, the hype cycle is going to go crazy. Their forward earnings is growing at double-digit rates for the next 5 to 7 years. It's just so many things are firing on all cylinders right now that they're, to me, the leader in cloud infrastructure. They're only going to get bigger in e-commerce. They're now the 3rd largest advertising platform that's only going to grow. There's a lot of things that are working that are going to continue to work. And I think the sky's the limit with this company.
I disagree picking Amazon over Nvidia or Tesla.
I think Tesla's got the most potential out of every one.
But over the next decade, aren't you betting on TAM? Like, that's why I picked Tesla.
No, because I don't know that robotaxis is going to be a thing.
I'm not betting on well, I mean, a little bit. I think Optimus in the next 10 years gets started.
I agree with that, but I don't know how until I see how many they can produce in a year. It's hard to really give them the top slot.
So you think Amazon outperforms the other six over the next 10 years?
I think there's a case to be made.
Interesting. I mean, look, you can't go wrong with any of these, quite frankly. But
I think there's a real case to be made.
Yeah, I was going to say Nvidia at first, but I'm like, well, once the GPU demand is gone, which maybe it takes 10 years for it to be gone, I feel like Tesla's the main beneficiary out of all. Because Meta, Google is just advertising. Apple's iPhones. Microsoft, yes, fine. Azure Cloud. But robotics and FSD is the inevitable byproduct of GPU demand, which has the biggest TAM. And so
yeah,
it's $500 billion right now. By the way, it's cheaper on a market cap basis than all of these companies. So a double gets me to $1 trillion, whereas all these guys to double has to be at least 3 to 4 trillion for all of these guys. Whereas I outperform if Tesla at least doubles, given the others might not double in the next decade. But I think all of them do well. Okay, so if you out of these 7, if you could never own one of them, what would it be? Like
I mean, I haven't bought Microsoft, so it's obviously Microsoft, even though I think it's crazy they were putting Microsoft first.
Yeah, I think it's crazy too, dude. I can't even rationalize it, to be honest. I really can't. I mean, OpenAI literally...
You should make a Twitter poll.
I'm going to post this on Twitter. I'm going to see what people say. I'm going to put your results and my results and see what people think. Yeah, it's crazy that we're saying Microsoft. Honestly, the answer should be Meta. And it's like, because...
No, it shouldn't. Absolutely not. Absolutely not.
They're a one-trick pony. It's advertising. That's it.
You realize that more than a third of the global population uses its products and it still is growing?
Yeah, but Steve, in 10 years, what? They're going to have...
Every quarter, more people use it.
Yeah, but dude, do you check Facebook anymore?
Do I care if I use Facebook? Or do I care that other people use Facebook?
Look, I agree. It's a stupid bear argument that people don't use Facebook anymore because billions of people do. I'm just saying in 10 years, pure potential of TAM, Meta's at what, 1 trillion right now? I don't know if Meta outperforms Tesla or Nvidia or, I mean, it's just advertising, Steve. There's no metaverse. That's gone. We know
there's a lot of money in advertising.
Sure, but they're going to do $1 trillion in revenue off ad. Like, like they're doing what, 120 billion right now? I mean,
I wouldn't bet against Zuckerberg.
I would pick Google over Meta. I think Google's doing way more in AI than Meta. Meta's using AI for advertising, but Google is like doing way more when it comes to just Gemini, their phones, eventually AI in the Pixel and Android. I
mean, Meta's going to grow at double-digit growth rates. I mean, this is, I don't know.
I agree. But if I had to pick one, Meta and Microsoft.
Yeah, I get it.
Microsoft's also a little bit richly valued. That's why people probably don't like it that much. Okay, cool. This was fun. This is good. I'll try to come up with another question for us next time.
I like it. And if anybody leaves a comment on the article, I will try to respond tonight.
All right, guys, please, if you enjoyed Steve's commentary today, the article is in the chat. I'm putting his Twitter in the chat as well. If you are on Twitter or X and you're not following dividend streams, he doesn't talk about dividends anymore, but please make sure.
Yes, I did. That's not fair. I wrote an article on NextEra Energy yesterday.
Okay, well, so he wrote an article on NextEra. Please make sure to follow Steve. Please make sure to give his article a click, leave a comment, and we'll be back later next week. We'll keep going from there. Are you doing anything over the weekend, Steve, or just at home?
Yet to be determined.
Okay. That's a great answer, actually. It's awesome. All right.
All right. I'll talk to you later.
Thank you, Steve. Talk later.
All right. Later. Bye.
Bye. All right, guys. Palantir Weekly is tonight, 11 p.m. Matt, Vince, Arnie, and I, and Amir, I believe, will be live. So we'll be doing Palantir Weekly. It'll be fun. If you guys haven't watched the video I put out yet about my takeaways from AIPCon, please make sure to watch it. Hopefully you guys enjoyed. That video came out. And then tomorrow I'll be uploading my reaction to Karp's speech if you haven't watched that yet. And we'll keep going from there. I thought that was a fun exercise, right? it was a fun exercise. This idea of the Mag 7, which one wins and leaves. Originally when I thought this, I thought I was going to take Nvidia. I really did. And then Elon called me back and I went with Tesla. Amazon's like, I can't argue against it, but I don't know. I can't argue against it. I didn't. It's better than the other ones if it wasn't Tesla and Nvidia. So makes sense. It was fun kind of thinking all that out. How long to Palantir is top 7? The problem with Palantir being top 7 is that it has to get to trillions of market cap. And that's just a little tough given they're an enterprise data company. There's no consumer product there. So I think, 300, 400, 500 billion, which is what Oracle is basically around, I think is very possible over the next decade. Trillions is just tough. That's why it's hard to get there. Now, granted, NATO, government defense business, if there, people think a consumer product is the way Palantir gets to a trillion, I think it's the government business. I think NATO in and of itself could be $100 billion business, not per year, but like over the decade. If Germany finally says, hey, we need to actually have like defense software, and France wakes up and Japan wakes up and all these companies. That's where I think Palantir gets a lot of the revenue. Commercial, yes, it can scale massively, but I think government is where all the sticky revenue is. If anything, I think that gets us closer to 300-400 billion, if not a trillion. Okay, cool. That's it for me. Thank you everybody for being here. Hope you guys enjoyed the market open, market close. We were back after a week of absence. Again, as I talked about on Tuesday or Monday, I really hated leaving for a week. This is what I love to do. I enjoy it a lot, and hopefully we're getting better every single day and making it more fun and exciting and growing the show to be even cooler. And again, I got a lot of stuff planned over the summer to make this setup and studio a lot better. I'm also thinking, guys, I think it's time to get rid of the bricks. Let me know what you guys think. I'll have to call a guy to manually take out the bricks because the bricks are obviously real. You see that crease in the back shows you how real they are. I'm thinking we got to have a whole different set. I've got some ideas. But let me know what you guys. It's not going to happen anytime soon, but I do think we change things up and make it look cooler. Maybe make it look a little bit more, not professional per se, but like a little bit more of a studio vibe, if you know what I mean. You know what I mean? Like just a little bit different. So show feet on the next live stream. Dude, my fingers still, look at that. From the manicure, they still look so good. Like, look at that, dude. These are just the cutest fucking fingernails. And like my fingernails have never been this clean, bro. Like this is incredible to me. So manicure and pedicure every fucking couple months. I think we got to get that job done. We got to get it done. Wood wallpaper. That'd be funny. Wood wallpaper. We'll see. We'll see what we can do. But yeah. So happy you guys are back. Hope you guys enjoyed it. Got back into the groove of the market open, market close. I thought it was a good week for the market open, market close. I wasn't really too rusty outside of on Monday and kind of just got back into the swing of things. And we're going to keep going. Consistency is the name of the game. And we got to keep doing what we got to do. By the way, one thing I'll say before I leave, none of you guys mentioned that I got a haircut. No one seemed to mention it. No one seemed to notice. Apparently it was unnoticeable for a lot of you guys, but I did get a haircut. As you can see, the beard is shaped up and it's nice, but no one noticed it. So thank you guys for not noticing. That's why I can't make an OnlyFans. If you guys barely notice my haircut, how are you guys going to care to pay for the feet pics? So it's a little sad, but it is what it is. Okay. Yeah. So Palantir Weekly, 11 p.m. We'll be back tonight. I don't think we have any streams over the weekend. Honestly, I got a lot of shit to get done over the weekend. So I don't think we'll probably post some clips of Palantir Weekly on Saturday and Sunday, but maybe we have a Sunday stream, I think, with someone, but yeah, no streams over the weekend. So we'll be back Monday morning. All right. Thank you for being here. Appreciate it. We'll be back 11 p.m. for Palantir Weekly. And Miguel says we are mostly boys here, Amit. We don't notice these things. No, boys need to also this is the problem. There's the stigma of getting a manicure or pedicure. We need to change the narrative. All right. Thank you guys. Appreciate it. I'll see you guys for Palantir Weekly. If not, enjoy the weekend. Monday morning, 8:45 a.m. We'll be back. Bye, everyone. Have a good one. Good night.